Hey everyone, welcome back to Corporate Decoder. Today we are going to dissect Twin Hospitality Group's latest financial report. Is this restaurant group serving up delicious returns, or are they a recipe for disaster? Hint, some of their financials are a bit hard to swallow. This report covers the first 3 months of 2025, so we'll dive into their numbers, see how their restaurants are doing, and find out if they are making or losing money. Before we begin, if you find value in dissecting corporate documents, make sure to subscribe. We also have a Discord community linked in the description below. Come join us. Let's get started by taking a peek at Twin Hospitality Group's balance sheet. It shows what the company owns and what it owes. This is as of March of 2025 compared to the end of last year. One key thing to notice is that accounts receivable net, which is the money owed to them, is about $2 million and lower than the $3.1 million from the end of last year. That could mean they collected less money or gave more time for customers to pay. Goodwill stays almost flat, around $117 million. This is an intangible asset, meaning its value is not tied to anything physical like a factory. It usually represents the value of the company's brand or customer relationships. Looking at what the company owes, accounts payable are about $9.4 million, a slight decrease compared to last year. Accrued expenses and other liabilities increased to $27.3 million. These are expenses that have been incurred but not yet paid. It seems to be more expensive to operate the company. Long-term debt, current portion, is the amount of debt they need to pay this year, and it sits at $10.1 million. Lastly, the accumulated deficit, which shows the company's losses over time, increased to about $101 million from about $84 million at the end of last year. Now let's move to the income statement or profit and loss, where we see if they made money over the first 13 weeks of the year. Restaurant sales were $78.4 million, lower than the $83.2 million from last year. On the other hand, franchise revenue, which is money earned from their franchise agreements, were about $8.7 million, about the same as last year. Food and beverage costs were around $21.2 million, which are lower than last year, but represent about the same percentage of sales. Labor and benefits costs were $25.2 million, lower in dollar value, but also representing a bigger percentage of revenue than last year. Advertising expense were around $5 million, which is also lower than last year. General and administrative expense comes in at $6.8 million, also lower than last year. Depreciation and amortization, which are the costs for wear and tear of assets, were $6 million. Putting it all together, we get a loss from operations of about $1 million, which is a lot worse than the $1.3 million gain from last year. Interest expense continues to be high at $10.8 million. The net loss for the first 13 weeks of the year was $12.1 million, which is higher than the $9.2 million loss from last year. Not good. That translates to a loss of 26 cents per share. Let's switch gears and look at the cash flow statement, which shows the movement of cash in and out of the company. This is very important as it shows what really happened and filters out the accounting mumbo jumbo. Despite the net loss of $12.1 million, there were other items that had an impact on the cash flow. Depreciation, for example, which does not affect the cash balance. Accounts receivable and other current assets had a negative impact, as well as accounts payable, whereas accrued expenses increased their cash amount. The purchase of property, plant, and equipment consumed $3.9 million, while proceeds from the sale added $4.4 million. Financing proceeds from affiliates contributed $11.1 million. Overall, net increase in cash and restricted cash was $2.4 million. Let's check how their revenue is coming through in one more section. Revenue recognized from franchise fees was only $73,000. This amount appears to be tiny when compared to the overall revenue of the company. This is mostly from recognizing revenue over time. Royalties comes out at $1 million. Their restaurant sales comes at $78.4 million. Now we look at the accounting policies, where they clarify their approach. They do say the use of estimates in the preparation of the condensed consolidated financial statements might mean actual numbers might be different. That's a standard disclaimer. Worth noticing, they say as a single member LLC, the company did not compute or disclose earnings per share calculations, and they are only doing so this year. Let's check their intangible assets one more time. Goodwill remains at $117 million, and trademarks also remain fairly constant at about $136 million. One last point, debt. Their long-term debt is about $402 million. That is a lot of debt for a business of this size. The good thing is that their immediate payments for debt are long-term debt maturities repayments of principal remainder of fiscalia low, about 10 million. Let's discuss some legal issues the business is facing. The US Department of Justice indicted the parent company on 2 violations of the Sarbanes-Oxley Act, dealing with a loan to their former CEO. Additionally, the SEC filed a complaint alleging failures to disclose related party transactions, maintain proper records, and making false statements about liquidity. It's important to note that while these cases involve the parent company, Twin Hospitality states it intends to vigorously defend against such matters. Overall, the report showcases a company facing some significant headwinds. Declining restaurant sales, high debt, and legal battles at the parent level are all causes for concern. Alright, that's our breakdown of Twin Hospitality Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.